Namaskar. Hello and welcome to P Guru's channel. You have Sridhar Iyer ji. Sorry, my bad. Sridhar Chityala ji. He's also an Iyer, but he liked to underplay that part. Sridhar ji, Namaskar and welcome to P Guru's channel. How are you, sir?
Namaste, Namaskar ji. I'm very happy to see you, and you got a very small vibhuti strand today compared to earlier last night. But I'm
Yes, indeed.
very happy to be here always with you, Sriji.
So, Sridhar ji, we have been looking at the numbers that India has put out. 8.2% in the last quarter, impressive performance. And
Yeah,
this is a rise of 8.2% over the previous quarter of GDP. In a sea of mediocrity, India shines alone. So to that extent, India deserves a lot of applause and opprobrium. But there are other things that have happened. So this is going to be a 360-degree view, viewers. Not everything is right. There are a few dark clouds, and Sridharji, being a banker, is going to highlight all that. Over to you, sir. And I request to all of you to please like this video now. We've done a lot of research to come up with these numbers and the slides. Over to you, sir.
no, thank you, Ji. So let's just get started. Right. Okay. So our focus is now on the most important Indian GDP numbers. As Sriji said, the context, it grew 8.6% or 8.2%, depending on nominal or real GDP, but considered as the best kind of performance over the last 6 quarters. Okay. So therefore, 8.2% is the real GDP adjusted for inflation. 8.6% is the nominal GDP, and it's within the context. It's a phenomenal reading, but we'll see how this translates for rest of the 6 months. Basically driven by two important factors. The manufacturing grew, which nobody should be surprised of. And again, the services sector grew, we'll touch on that. This is only in the partial month of September, we had the 50% impact kick in on the US tariffs. The other concern is obviously the depreciating Indian rupee. Year to date, I think it's about somewhere between 5 and 6%, but between June and December, it's about 3.6%. So obviously that has kind of what you call snake and ladders. It continues to drag the GDP down on the US dollar basis, not in Indian rupee. So how did India accomplish this growth despite economic headwinds around the world? Obviously, manufacturing was significant, driven by about 9.1% year-over-year growth. Construction grew 7.2%, which to me was a surprising number. So the construction continues to boom. Agro sectors, given that there is a shortage of food and India is now exporting to markets which are favorable, and that grew about 3.5%. But the most important thing that happened during this period is the consumption side. The private consumption was the main driver. And a lot of microeconomic factors played its part in that. Obviously, the GST reforms, where the GST came down as part of the normalization that the finance minister announced, the lower income tax slabs, and obviously the interest rate cuts, and also the lower inflation, which I kind of a little bit touched on, boosted the consumption. This is direct out of RBI's data pool. All of those numbers make an impact. Now, all of those things simultaneously descended in the June to September, and you saw the impact of it in the GDP numbers. Next slide.
This is the next slide, sir.
Yeah, right. Sorry. When you look at the services sector, where did it come from? Obviously, which represents 50% of the GDP. It's IT, financial services. There's a lot of activity in that, and telecommunications. There's a lot of activity in that. All helped and aided the services sector. Then there is also what we call famous demographic dividend. There's a lot of youth studying and also contributing to the consumption. Infrastructure development is driven by the government. A lot of these are not the PLI programs I'm talking about. I'm talking about the government directly investing the money into various infrastructure projects. You can see, this is across the roads, railways, ports, energy, and obviously the digital infrastructure, notably the expansion of the UPI program. UPI is going now global, going to many locations. Is obviously increased domestic consumption, which also played a part, and the what we call as the structural reforms, which is within this government, is around the GST, the PLI programs, and obviously there have also been boost on FDI programs, giving incentives as part of the PLI. But having said that, there's also been a pullback of money from India. We'll touch on that in the end. So these are the kind of the key factors which was helping to drive, and obviously it played a part, and the numbers tell the story. Where does this leave India in exports and imports? Okay, clearly the import numbers are not going to be around 95. We are going to finish imports. There's going to be a rise in imports, causing probably a deficit close to $100 billion relative to $80 billion in the last FY25 year. Total exports is about $419 billion. We'll talk about which are the segments that drove that $419 billion. And it witnessed a 5.86% growth relative to the corresponding half of the last financial year. This is a very big number. Oh no, this is the previous slide, exports. Yeah, $419 billion, 5.86% growth. It's the highest export performance, very much on target to hit that 1 trillion. Remember, FY25, we were around $780 billion in terms of the exports. Then key sectors, electronics, there's a significant amount of, this also helped on the services side. There's a significant amount of telephones. It now represents, the mobile phones constitute about 41% of the phones that is used in United States is imported from India, and they were exempted from this punitive tariffs. Let us see how it goes. And the electronic sector grew about 28%. The agro, which is meat, dairy, and poultry, that grew about 24%. Marine products grew about 16.18%, and cereals, other than the dairy, that grew about 25.52%. Remember, quite a few of the other items like garments, etc., they were all impacted due to the tariffs. So, garments, gems, etc., the tariffs played a part. So you don't see a big number reflected. Having said that, India still achieved a very healthy number in 420 billion by way of exports. Now let's go to imports. Wow, yes, imports grew as well, but at a smaller rate, 3.5%. So to that extent, that there is a net positive impact as far as the first half is concerned. But let's see, what happens as we move into second half, with exports likely to be impacted as a result of the tariffs, because United States is the largest destination for Indian exports. So imports is about 472.8 billion, a 3.5%. Non-petroleum, non-gems, jewelry rose 8.3%. China followed by UAE. Why China? Rare earths, pharma APIs, chemicals. Some of these things India received from China, and then UAE is obviously oil and other factors. Trade deficit narrower than expected due to this in the first half because of the lift in the exports. Next slide. Okay, so where does this leave India and exports and imports? The same continuation. This is very specifically as it relates to US. Look at the number. Indian exports grew 13% to US to 45 billion. Okay, it has to touch about roughly close to $100 billion or $90 billion. Then including the FDI and services, it's supposed to be around $125 billion. But let's see what happens despite tariff headwinds. Now, I use the word despite tariff headwinds basically because that applied only for 1 month, but there was gyrating tariffs ranging from 25%, and then the Russian oil put it into that 50% barrier. As of now, as we speak today, with some modicum of changes, India remains the highest in terms of the tariff at 47%, and China has also kind of come down below, is around 38% or 39% with the fentanyl, and also benefits from their agreement to release more resources, rare earths for 1 year. So what drove this exports despite the constraints that the US placed on it? Obviously, competitiveness, sophistication in logistics, and structural reforms, which includes making very specifically here the business in India. But I have to tell you, I have some questions around the ease of doing business in terms of the bureaucracy. But probably, I'm a small guy. For large guys, it may be a different aspect. There's also very noticeable reduction in garments, but increase in electronics, petroleum, and pharmaceuticals. Increase in electronics because India is reliant on sourcing the spares and other things from China and Vietnam, and putting together and sending it to United States and other destinations. Those gaps are being closed out. Obviously, petroleum from Russia, and then the pharmaceuticals from pharma APIs from China, but then it exports big time to United States. 50% of the generic drugs that the United States consumes is from India. 30% of the non-generic drugs, which is the branded, is still sent from India. So these are all chemicals, pharma, IT services. They're all very lucrative businesses by way of exports. It remains to be seen as to what happens when these tariffs headwinds take effect in the second half of the year. The tariff negotiations, everybody is keen to know, is at an impasse. We are trying to get Sergio Gore to our program, so we can get at least 5 minutes with him, so we can get his views as to what he is attempting to do. Now, everybody has stated he has a direct ears and voice to the White House. So he's obviously being sent for a specific purpose, and let's see what happens. So we'll try to see if we can get him sometime this week or next week into our program. Okay, next slide. Right, this gyrating currency takes India to 4th position, then it slips down to 5th position. Now it's oscillating somewhere between 4th and 5th position in the 3rd or 4th decimal point. So both Japan and India are at 4.19 trillion. When will we hit this 5 trillion mark? Is one of the questions that was posed to us during the earlier DGI days, and when everything was gung-ho, when the currency was around 78 to 80 cents, 80 rupees in a dollar. Now it's kind of gone through the burst. It's around $90 right now. So with currency fluctuation and headwinds on exports, India is kind of a little bit toggling around the 4th position. Hopefully, with a 6% growth, India will leapfrog, because Japanese economic growth is less than 2%. So India will definitely in 2026 get past and move comfortably into the 4th place, and hopefully by FY27 it will even bypass Germany to occupy the 3rd spot. We're talking about nominal GDP here. One more previous slide, one more time. So you can see the per capita. There has been a per capita movement. It has gone to about $3,000, which is a healthy number. But if you take on a PPP, that's around $12,000, which is again a very good number when you compare many countries relative to where India was on the purchasing power. Next slide. Right, so we gave some key KPIs, 4.19 trillion. We had already covered this on the PPP side, 7.71. The growth, this is where the rubber hits the road. India achieved in FY24 6.5%, FY25 6.4%, despite this June to September quarter growth the annualized growth is expected to be only around 6.3%. So this is the headwinds that people have factored in. What are the headwinds? Currency depreciation is good, it helps exports. But the biggest export player in the game is United States from India. Now they have put tariffs, which is creating an impact in industries such as garments and gem industry and jewelry and so on. It remains to be seen how India is going to offset. India has no issues on the energy imports or energy exports because everybody is lining up to supply India. But the real problem is around the exports, which is likely to create an impact on the future, on the projected outer years, GDP growth. The second point that also we need to look into is that four big factors played in the last quarter. What are they? The income tax, the GST harmonization and reduction in the GST rates, and third, interest rate reduction by RBI, and inflation, which is running low in India. So these factors played a part in the big number that you saw, whether it's 8.2, the real GDP, or whether it's 8.7 nominal GDP. Those are the headwinds that are hanging out there. So if you ask the question as to why the currency is depreciating when your economic growth is so good, and there are very compelling reasons. During the same period, close to $16 billion of market pullback on the private equity, venture capital, as well as in the equity markets aggregate by the international investors. That's one. Number two, the imports are rising, so there's a demand for the US dollar. And Indian RBI has said, okay, fine, I accept. I'm not going to reduce my reserves from $690 billion. I'm not going to allow, go into the market and try to protect the currency. Let the currency make its way. That's the second factor. I think the third factor is obviously tariffs. There's a fear whether the tariffs are so high. When the tariffs are so high, whether, notably the United States can buy stuff from India. So that's the third. I think the fourth factor, which is also a very, very significant factor, is how is this India, US, Russia, China geopolitical play is going to pay out, and what would it cost on the stability of the Indian economic system? These questions are being asked only because of the geopolitical tensions that India faces. They won't ask the same question to Japan or Korea, notwithstanding the fact Korea has constant threats from the North Koreans. Japan has constant threats from North Korea and China. But most of the action seems to be around the South Asia and North Asian segments, all concentrated around India. So the question, therefore, is how far these things will play a part in the economic equilibrium of India. Consumption, which again rose, whether the Indian consumer will continue to pour money to spend, which is another kind of a significant driver. So these are some of the questions that are being asked, and people are not celebrating this 8.7% as a runaway success. That's where we stand. We'll continue to report these numbers as we do to you through such programs like today. Over to you, Sri.
Thank you so much, Sridhar. This is one question that people keep asking. Who sets these exchange rates? Is it the BIS, Bank of International Settlements, or is it the Reserve Bank of India?
I think the base rate is set by RBI, but they allow the rate to vary depending on the markets, because India is now, INR is a freely traded currency.
Well, so we have to qualify it, sir. It is fully convertible for current account and not fully convertible for capital account, isn't it?
Well, I'm talking about the FX markets and the currency pricing. What you are alluding is absolutely correct, which is namely you're talking about the transportability of the dollar whether it
Yeah.
is fully or partially. I'm talking about the currency rate. So the currency rate is determined by demand and supply. The price point historically, for example, who sets the price for renminbi? It's not currency markets. It's set by China.
Completely opaque, sir. Completely opaque. These guys have, Vitlacharya movie. You can make a Vitlacharya movie out of
Yeah.
how the dollars go into Hong Kong and then come out as renminbi. Nobody knows how much comes out. Nobody knows how much goes in.
Exactly. So just imagine, go back and check the renminbi, 6.2 to 7 to your dollar. It has remained for considerable period of time, whereas Indian rupee from 85, 84, it's gone to 89 in just less than 1 year. 1 year. Okay, that's the market pricing. Is obviously there is a high demand for dollar too, so that importers can. And when you have high demand for dollar and the import is rising, then you will find that it's the same. If there is a demand for INR, because if people want to, then the INR rate goes down because of the demand. But unfortunately, US dollar is in demand because there's more imports coming into the country, Sriji.
Thank you, sir. And this debate will go on. In fact, I did a complete story about how India has slipped from 3.3 rupees to a US dollar in 1947 to where we are today, and we continue to do the same thing. See,
Good.
sir, there are a few things that India can do. Reduce your import substitution, import bill by doing local substitution. For example, many have said that this electronics thing, number 2 in cell phone manufacturing, much of it is screwdriver technology. That's what people say, which means everything is coming from China. You are just doing labor arbitrage, meaning you are using Indian labor to assemble the things that used to be done by Chinese labor. So to that extent, you are saving the money, and to that extent you are generating some revenue, because like you do something, you save a little bit of money, and then you export it and claim that is export. However, as you do this thing, India needs to be seriously looking at companies like Foxconn to do import substitution, meaning like keep looking at local manufacturers to see if there are things that are on par, and or if not better than the existing component that you are using, and then start using those. So there should be a lab continuously evaluating local substitutes. I don't know if it's happening or not, sir. You can maybe throw some light on that, because that is the key to try and get away from this reliance on China.
I think that we need to recognize the fact the real Indian growth story didn't develop in 1991. It started to develop in 2014. So many of these questions that you are raising, for example, do we really India needs to import, the retail electricity bulbs? Does it need to import air conditioners? Does it need to import low-cost items when all of them could have been manufactured in India, including Sengol would have been imported from China, Sriji, if not for you.
Sir, it's manufactured in India, sir. Sir, I'm telling you, this is something that I decided that I'm going to make an example, and I'm going to do it all in India. Viewers, it's a little bit more expensive, but you have also stepped up and bought these things. It is made in India, sir, every bit of it.
I know that. Yeah. That's why I was trying to bring that point across to you. So it's not, I think that there was both lack of political will and lack of commitment. So that, maybe they wanted to package India and sell it to China. So almost, everything was coming from either China or Russia. So you can go across the spectrum. There's a real challenge. But things have improved or improving. But this is going to take maybe 20, 30 years of, economic change and entrepreneurship and local development for it to happen. Well, they are taking up, India is taking up activities around many highly intensive, capital intensive industries such as defense. There's a lot of defense production now goes on in India, and that's not just simply buying stuff from China and doing it. They are indigenizing that. The semiconductor also they have started. Yeah, okay, mobile phones, it's low cost, and they may have to import it, but they do it and repackaging and selling it. Who knows? In 5 years from today, everything will be in Indian. You're talking about these little QR code readers. The electronics behind this QR code readers that you see all over the place, which is doing the digital transformation in India, is also imported from China, Sriji. So therefore, it's changing, but it's changing at a very slow pace, which is the reason why India takes forever to be a $5 trillion economy, when long time ago it should have been a $5 trillion economy.
Yes, indeed, sir. I mean, I can take a whole program explaining how the Singol is manufactured in India and the kind of headwinds that we run into. Thank you so much, sir. Let's take some questions now. Srinivasan Iyengar wants to know, still, how long we have to wait for US-India free trade agreement deal? Date and month after month are just passing, yet no deal. US has stopped talking now on deal like earlier months. Where is it stuck?
Well, it's stuck between the two governments. I mean, it's not, it's obviously Trump and Modi are not going to meet. At Piyush Goyal, who is the nominated person, and Scotty Bessant, who is the person from United States, though they say that Howard Lutnick is the one. No, it's not. It's Scott Bessant. And their whole focus was on China. India had its moment, and India, for whatever reasons, it lost the momentum. We can give you n number of reasons. They promised that the deal would be done by November. It hasn't happened. Even they wanted to exclude the food. That has also not happened. But there are invisible forces which are delaying this within the US administration. And Trump is in no hurry to get this deal done, because he thinks that he's on a good path. India thinks that, hey, at that kind of levels, I'm not going to, I'm not coming to the negotiating table either. When you have time, you come back to me, I'll do it. In the meanwhile, they are doing deals with, EU, they're doing deals with UK, they're doing deals with smaller countries. They have done a large deal with the African countries. They're doing deal with, Caribbean countries and so on. Whatever kind of works for them, they're doing. Now, the numbers thus far, as I mentioned to you, up until September 30th, the numbers have worked because the impact of the big 40-25, it was 15%. It's now gone to about 47%. The impact of that will be felt in the third quarter. In the third quarter of Indian economic calendar, which is, I think, October 1st to December. Let's see what that happens. Clearly, it is stuck. Either parties are playing bravado, but none of them are moving the needle. In the meanwhile, a strategic defense partnership and strategic defense agreement has been signed between the two countries, but that doesn't translate into dollars.
Sir, there's also one other thing that happened in the United States. Fearing tariffs, many importers of Indian products in the United States have actually stocked up. So when you stock up, you have a lot of time. I mean, you need a lot of time to unload that. So what happens is, your first thing you do is, okay, I have enough now for the next 3 months, next 6 months. So I'm not going to take any additional import because it's going to be at the higher rate. So this is also going to be a big impact. Just wait and see, sir. This is going to become an impact also. Next one.
Yeah, no, based on my data, Sriji, that is more I hear is Chinese and Chinese products with a made in Korea label has also trickled in. So therefore, by the time they woke up, that it was too late. But I've not heard about. But you are probably got your research is far more accurate in terms of stockpiling.
Next one, please. Raisin wants to know: does the devaluing of the rupee happen because India is printing more rupee to meet its deficits?
The devaluation of rupee is happening because of 4 or 5 reasons we pointed out. Number one is the trade impasse. which is going to have a huge impact on the export side. That's the first. The second is because of more imports and imports happening in US dollars. So Indian importers are buying more US dollars, which obviously depreciates the rupee. That's the second. There's also concern whether FDI, which flows in US dollars, there's been a reverse flow of close to 16 billion or 17 billion dollars out back reduction. So that's also played a part, especially in private equity and VC, and also in equities markets. So that's the third reason. The fourth reason, which is being pointed out, is whether there will be even more punitive issues that are likely to develop between India and United States. There are so many US companies now located in India, and they provide a lot of they contribute to a lot of GDP, especially in the local IT services. So these are some of the things that are playing a part in the depreciation of the rupee. There should be more demand for INR, not more demand for US dollar. When it happens, then that's when you'll begin to see the stalling of the. Remember, this is not too long ago. Around 10 months ago, India was around the $83 to $85. 75 was considered the hallmark, but 75 to 83 was accepted as a 10% ban. Now we are now beginning to add another 10% to the 10%. That's where you are seeing the decline in the US in the depreciating rupee.
Kajan Lakhan wants to know, when are BRICS going to get its own ships for cargo transportation?
Well, China has ships, Russia has ships. So the question, and by the way, Brazil has ships. So therefore, the question is not more ships. The question is, can they agree? And does India trust China? Yes, it does. And that's why it's doing more imports. Does India trust Russia? It does. But it can't do more. It has to go a circuitous way because there is a ban. The BRICS has remained a kind of a football. India really wants to be leading global south. For whatever reasons, it is quite reluctant on moving ahead with the BRICS model because of two important players who could push the barrel. One is Russia and the other is China.
Next one, please. Madhusudan wants to know, should India pursue a strong rupee strategy and become an importing nation?
I think, US is a net importer. US is one of the largest importers in the world. So therefore, I think the theory that you want to be, if you talk to global economists, and if you are the globalization pundits, they will tell you that one should not be concerned about imports or exports. And if all you need to produce to create your GDP warrants imports, do it. So that is the academic kind of a model. No less than Dr. Panagaria and I forget the other gentleman's name. Who promoted
Amitabh Kant? Amitabh Kant?
No. Amitabh Kant, no. No, he's from he's the uncle of Uday Kotak. He's from Columbia University. They were I forget his name, Shriji. So he's Arvind's professor. So both of them wrote a book on globalization. They will strongly argue what's wrong in importing. Nothing wrong, because at the end of the day, we import and we can export, or we can use it for local consumption. So I would say that, but for you to have a strong Indian rupee, then you need to have your capital flows. India doesn't have significant capital. It's only now they've got $700 billion of currency reserves, which is enough for it to import in the event of a crisis. So you need a strong domestic capital. You need a very strong, consistent consumption. Remember, most of the consumption comes from the urban areas. But in recent months, it's the urban and rural consumption that has driven the Indian economy. Then you need to have, credit expansion, as well as the government, expansion of the PLI programs across many sectors of the economy. It may happen one day, because when India recognizes that it's a single trick pony as far as exports are concerned to United States, the biggest market, it may say, okay, we can't be dictated, so we may go to a as needed import model, and as needed exports we will do. So this gentleman who is asking the question could turn out to be correct. In the end, India may become a big importing nation.
Milban Cherian wants to know, is our RBI privately controlled like what happened in the US? Clueless question.
No, the RBI is, there is a very close integration between fiscal and monetary policy. It is meant to be the creation of MPC, Monetary Policy Committee, and interest rates. The creation of MPC, consistent with global guidelines, did put India in that independent, objective central bank policy framework. But whether it is truly central, or whether there is a close tie-up between integrating fiscal and monetary policy, which resulted in the present RBI governor, the prior RBI governor, coming into taking on those responsibilities, so that there is a friendly relationship between the central bank and the finance ministry. That's not the case in, the Fed is truly independent in United States, except when there is a political alignment. When that happens, then you do find. It happened in the Trump administration. It has happened in Biden. It has also happened in Obama years, Sriji.
Thank you so much, sir. So this thing comes back to one small thing, viewers. We cannot be a net importing nation because you have a lot of hands. You need to keep the population busy. You need to find them gainful employment. So the key here, how countries have grown, is they always look for what is the next thing on the food chain and go up that food chain. For example, like Sridharji said, if you are importing even little tiny screws for your assembly technology, if we can't even provide those tiny screws that go into assembling a phone, that means we need to start at a very low level and start building it up. India has achieved 85% self-sufficiency in arms and armaments for many things. However, that is the basic workhorse stuff. When you look at the high-end stuff, India is still importing S-400s, it's importing helicopters, it's importing aircraft engines. All these things are, should be domestically done. Even China doesn't have an aircraft engine. They still get it from Russia. The J-15 or J-17 or something, J-35. I can go on and on. Hey, everything, search and replace F with J. I don't know why J. Why can't it be C, sir?
Yes, it's what you call, it's to create an illusion. It is J.
Yes. Very true.
Not
very
C.
true. And I have asked this question of many people as to why India keeps, devaluing its rupee. The reason for that is when you are competing in a global market, such as, for example, United States, to sell a garment, who are your competitors? They are not inside India. There are in India itself, but there are also outside of India who are having a better tariff situation. And what do?
Yeah.
So there are all these cross currents. Sir, you wanted to say something?
No, I just wanted to say to you that, but for, almost close to 0%, now around 1.25%, interest rates in Japan, the Japanese yen continues to depreciate. It's around 158 yen per dollar. Okay. So therefore, because what is driving it? It is driven by the low-cost Japanese yen. India is not. Nobody is. There's no demand for INR, even for energy trades. India settles much of the energy trades through US dollar, not through BRICS currency.
Yes.
Yeah,
we went over that. See, we are the few we are among the few who talked about India buying its oil from Russia, paying for it in dirhams, paying for it in yuan. Nobody else has done it, sir. Sir,
Yeah.
Gurus is it's a different level in terms of what the content is. You get there, we get intellectual stuff. These are all not things that are going to, make your life tomorrow. But this will make, if you do some things right today, 5 years down the road, you'll have a better life. That is the whole point here. Thank you so much, Sridharji. If you'd like to add something, please feel free, sir. We can go on and on, but I think we've made the point. It's a complex stuff that's going on. At the same time, India should continuously try and indigenize whatever it is that it is doing, screwdriver technology, and continues to impress upon the Foxcons of the world that, look, here is an Indian manufacturer who can do equal or better and at equal or better price, and we should consider them, start substituting, and then start making things. That's how it will grow. Thank you so much, sir. If you would like to add something in end, please feel free. Otherwise, we can wrap it up now.
No, I think that you have summarized it quite well. I think we have covered quite extensively three important vectors or three important domains. One is the global markets and the way the markets play out across currencies, equities, bonds, and including oil and exotic cryptos. We have consistently, updated our audiences around that. We have consistently updated audience around the economic drivers and what is driving the global economic kind of growth and the interdependency of these various major economies. We have also covered the third facet, which is namely how the fiscal and monetary policies play a significant role, and why countries like India are still the bright hope and future. As Sriji pointed out, there's been extensive data and tables that we have shared both on current and future and the past, and trying to translate that into why some of these things unfold. But it's a slow chug, because transformative growth takes time. I mean, structural reforms is another important area. How much of structural reforms have happened in India? And all of them have happened in the last few years. Otherwise, India was not an easy country to do business with. And same China. China is not an easy country to do business with. And they have got themselves having secured money in their bank. They have $3 trillion. They've got money in the bank. Now they're playing the hot ball. India cannot afford to play the hot ball at this stage because it doesn't have the same money as China has in its bank account, Sriji. With that, I say thank you, and we'll continue, and we'll have more excitement in the days to come.
As always, a pleasure having you on our platform, Sridharji. We try to make it on Sundays, but Sridharji is a very busy man. He's been traveling, and whenever he can, he tries to make it at the early part of the week. That's how this happened this week on Tuesday, but hopefully we'll do it next Sunday. Sir, namaskar, yes, sir, and we'll look forward to getting Sergio Gore. You'll be part of that conversation. Absolutely. You'll be steering that conversation. Thank you, sir.
Thank you. And we will be on Sunday, Sriji. We will be on Sunday, this Sunday. And whether it is Sergio Gore or whether it is our very favorite topic, which is carry trades.
Yes. This is about to bowl. Googly has been bowled already. So that is going to start reverberating across the world. Thank you so much, sir. Namaskar.
Namaskar. Thank you. Have a wonderful day, Sriji.